13th. It's been a fairly quiet week on the interest rate front. We've had mortgage rates kind of dropping slightly, even though the stock market's been vacillating up and down. It's still continuing to ride the roller coaster. Doesn't really seem to be an end in sight for that. I want to share with you some of the noteworthy economic news of the week in regards to the mortgage market. First of all, big news here. FHA announced they're running out of cash due to the amount of insurance claims they've had to pay. Seems like a big deal, but it's government insured. We know that they can print more money. We're pretty sure they're not going to allow the FHA to run out of cash. So nothing we should be too concerned about. 30-year bond auction had a little bit of a lackluster demand. That contributed to the rates in this week not really moving a whole bunch. Lackluster meaning, people saw the 30-year bond offering and said, yeah, we can take it or leave it. Kind of stayed at par right about where we'd expect it to be. We saw retail companies reporting an increase in sales. However, there's a lot of reports out next week, and we can see maybe people coming out saying there's a decrease. That's what we've seen in this market. Seen a lot of up and down. We've seen the positive signs followed by the negative signs. It's given everyone kind of that sense of insecurity of where we really are. But I will say some good news is that foreclosures dropped for the third consecutive month. We're hoping that the worst is over. One thing that's kind of some would say, the cloud is that this is their 18% growth in foreclosures year over year. There's a lot of concern about the fact that there's a lot of option arms out there that still haven't reset. So there's a lot of exposure and potentially some more foreclosures on the horizon. The one hope that we have in dealing with our customers, and especially people who may have an option arm themselves, is that the banks have really figured out a streamlined modification process or what they're going to do with those assets, and that they've learned a lot of lessons from the subprime meltdown. Zillow reported that 21% of single-family homes are currently underwater this last week. That's better. It was 23% before. So that indicates that everything's getting better and things are starting to improve. We're actually seeing on some appraisal fronts areas of the state of California, and specifically the Sacramento area, that are starting to get a little better, starting to rise. So next week there's a lot of economic news out there. It's the week leading up into a holiday week. Really, everyone's going to want to get a lot of stuff off their plate. We're going to see a lot of economic news. We'll probably see some activity in the stock market and expect a quiet week following that. So we have a retail sales report. We've got Ben Bernanke speaking. Who knows what Ben's going to say? Last time Ben talked at a cocktail party and said some off-the-cuff stuff that sent the mortgage market into a tailspin. We've got the producer price index. I will not waste your time with explaining that right now. We've got the housing market index. That's something people pay a lot of attention to. The consumer price index, which is kind of a validation of what consumers think about the economy. We've got new housing starts due out on Wednesday, so that's going to tell us how the building is taking place. Are people, even with the inventory issues, are they starting to build new projects? I know for myself, there's an area by my house where there were some projects that were shut down. They're getting back into them now, so that's a good sign. We see the bulldozers out there, and we actually like it for a change. And then last but not least, Thursday's going to give us the weekly jobless claims. That seems to be a big one because we saw unemployment rise to 10.2%. Where that goes, a lot of times dictates the mortgage market. If you're sitting on an exposed lock, you haven't done anything, Thursday's a day that you're going to think about maybe doing something and pulling the trigger. Thanks a lot for taking the time to watch this. Once again, we can always be reached at Granite Funding Group, 916-517-1800. You can email us directly, leif@granitefundinggrp.com if you want any more information on this or anything else in the mortgage market. We hope you have a great weekend.